Welcome to our channel Trading Tricks and Clips. This video is a supporting video for the Nifty research article posted on the blog nifty50study.blogspot.com.
In the daily chart of the Nifty, it is visible that Nifty has tested a level of 17,972 on 1st of February, and then after it has given a bearish move of up to 17,345. In my last week's study, I have suggested that one can initiate a bearish trade near 17,900 to 18,000 levels, which was correct prediction. Now let's see what is visible on the charts for the coming weeks trade setup. The weekly chart is showing that the price has tested 50 weeks exponential moving average, and from there it has made a good bullish candle. The bullish cross formed by the 21 EMA and 9 EMA is intact, but the price has closed below both those EMAs, so it is a confusing one. The weekly chart is giving a confusing signal. Let's look at the daily chart. It is showing that the price has tested the 200 days moving exponential moving average twice, fallen down, regained, and again fallen down, then regained. So this seems to be a good buying zone. If we look at the line chart, it is forming a double bottom pattern, W pattern. It's down, up, and it has a double bottom pattern, which means the prices are likely to go up from here. The 21 EMA and 50 EMA on the daily chart. These levels may act as a resistance, so there is a possibility that Nifty may go slightly upwards to these levels, again 17,900 to 18,000, and then after we may witness a fall from here because there is a resistance. Though there is a goodwill, and if this level gets broken, and if price goes above this and holds above this level for a day or so, then we may witness a good up move from here. The daily chart is showing formation of a bullish cross using 21 exponential moving average and 9 exponential moving average. So the early chart is also giving a bullish signal, and you can see the double bottom is formed here also. It is not looking exactly as W, but yes, it is a double bottom because price has come down, went up, then again come down, again went up. So this is also a kind of double bottom formation, and obviously if it is formed on the daily chart, it is likely to be formed on the early chart also, because we are taking the same instrument, Nifty. Okay, so let's have a look at the other aspects of the market. So if we look at the institutional figures in last week, if you check, okay, so that is not visible here. Let me do it manually. So the foreign institutional investors have sold about 14,445 crores last week. Domestic institutional investors have sold about 14,184. It is, the similar amount. So whatever amount of shares FIs have sold, the Is have bought everything, just except 300-400 crores. So the FIDI data institutional figures are not showing any clear picture of the trend of the next week's market. Let's check the open interest data of the options. So if you look at the OI change data, it shows that there has been a good put writing on the Friday and negligible call writing on that day. So the put writers were there, and they it is evident on the chart that there was a bullish signal, double bottom and 200 days exponential moving average has been retested. So obviously the put writers will were likely to take command at that level. So that's why I think there has been a put writing at all the levels and no call writing. If you look at the outstanding open interest data, it shows that there is a huge call writing. 18,000 is a huge call writing zone, while the 17,700 and 17,600 are the put writing zones, which means 18,000 zone is very difficult to break and 17,600 is also very difficult to break, and the 200-day exponential moving average is lying at these same levels. So there may be possibilities that Nifty trades in the range of these levels like 17,700 to 18,000, or maybe there is a break. I mean, what I see on the charts, I feel that there should be a break above 18,000, not below 17,700. But let's see what happens. Until then, there is no trade setup. I mean, I'm not getting any trade setup here. I will take a bullish trade only when 18,000 is broken and price stays above this level for a day or so. And yes, at current levels, because level bottom has been formed, so at current levels one can buy Nifty ETF for long term if someone wants. Thank you.
Thank you for watching us. Please visit nifty50study.blogspot.com to read the complete analysis and conclusion.